So in this video, I wanted to talk about how I learned to sell options. So before getting into that, I would have to mention what made me want to learn to sell options. So before I was selling options, I was mostly swing trading. So for example, if I'm just looking at BABA here, I would just look at quality stocks, and then whenever they would drop for some reason, I would just buy and then wait a bit and then sell it and make that, I don't know, 10% profit. It was working for a while, but then at some point I got caught often where the stock would just continue to drop. If you look at BABA here, for example, it was trading at 309, and then imagine that you see it dropping to 260. So you would think it's a good opportunity to buy. So you buy, and then you're gonna end up holding forever, because as you can see, it just continues dropping. What I would do in that case is that I would buy some more. That's why I would always go in with $1,000 chunks, so that in case it falls, I can buy some more. But imagine if I was doing that with Alibaba. I would have been buying constantly, and it just keeps dropping. But how do I make money in this case? Where's my income or consistent income? So I got a little bit tired of swing trading because of that scenario, which started happening often. So I don't know how. I came across this YouTube channel, Alan Ellman, where he talks about covered calls. I started watching his videos, and just the concept made a lot of sense to me. If you own 100 shares of a stock, you can sell calls against it, and that call that you're selling is income that's coming in. You're collecting premiums. So the idea of controlling your income, not necessarily controlling, but you can purposely collect income when you want to. You don't necessarily control the amount of income, but you control whether an income comes in or not. Versus swing trading, I have to wait for the stock to drop, and then I have to wait for the stock to go up for me to sell and make a profit, if I want to consider that as my income. With covered calls, I can buy the shares and then sell calls right away, and I'll consider the call as income, the premium that I collect from selling the call as income. And the only downside to that is I miss out on capital appreciation. But if I don't care about capital appreciation, if I care more about the premiums that I collect upfront consistently, then in my case that was perfect. Better than buying and holding and waiting or swing trading. So I learned covered calls from this YouTube channel, Alan Ellman. I didn't pay for anything. I didn't buy any courses, just watched his videos, and that's how I understood covered calls. But then through my own experience, I realized that it's not that easy, because you could end up buying a stock at $50. You sell a call at a 50 strike, collect, I don't know, $3. That's amazing. $300 right away in 1 month from putting a $5,000 investment, and I don't have to wait for the stock to go up or down, or it could stay flat and I still make my $3. But then there's an issue where what happens if the stock drops to $35? Then I paid $50 for the stock, but I can no longer sell that same call option at a 50 strike. It has no more premiums left in it. I'll have to sell at a lower strike, and if I sell at a lower strike, I risk losing my shares at that lower strike. Because when I sell a call, if you go back to the definition of a call option, the buyer of a call option has the right to buy 100 shares of that stock. So if I'm the seller, I'm on the other end of that transaction. So if a buyer of the call option has the right to buy 100 shares, then if he buys 100 shares, then I'm gonna have to sell 100 shares. So by selling a call, I risk losing my shares at that 50 strike. So if I bought the stock at 50, and I sell a call at 50, I risk losing my shares at 50, no problem, but I collected $3. So my profit is $3, and it's known, and I get my capital back, and I can repeat the process if I want to. That's if the stock is above 50 by expiry. Now, so that was the issue with covered calls for me, is that sometimes the stock would end up dropping to 35. Now I'm stuck. I have $5,000 deployed in a stock. I can't even do anything with it. I can't sell calls. What can I do? Can I buy another 100 shares at 3,500? But that would be too much capital. So at the same time, he was talking about cash secured puts. I was kind of ignoring it because I felt like I didn't want to learn too many things, because if I start learning too many things, then I start questioning myself and wondering, should I go for this? Should I go for this strategy? What's best? And then I start to confuse myself. But because of my curiosity, I ended up watching his videos on cash secured puts, but then realized that it's not something I could do because it requires 25,000 equity in a margin account with Questrade. So I skipped it. But then with YouTube's power or algorithm power, I came across Option Alpha YouTube channel, and I would say this is where I really got most of my knowledge from in option selling. I would say probably more than 50% of my knowledge comes from this channel here, Option Alpha. So this is where I learned the fundamentals, the basics of option selling, and also the concept as well, as in why sell options, why is selling options better. And he's got a video here which is where he talks about the edge about selling options. It should be, yeah, there you go, this video here, what's our edge trading options. It's a 40-minute video, but it's a great video. It really makes a lot of sense and explains the advantage of selling options, and especially that implied volatility over time is usually overstated. So if implied volatility is overstated, you want to sell it. Now there are scenarios, of course, where actual volatility will be higher. So during a crash, the stock actually moves than the expected movement. In that case, you get in trouble, but most of the time implied volatility is higher. So that's the edge really when you sell options. So it's from this channel that I learned most of the basics. And he also has courses, I think, and he's got like trade alerts as well. I didn't pay for any of that. I didn't buy any of his courses. All the information is available for free on YouTube and especially on his channel. And from his channel, I learned about spreads. So put spreads, credit spreads, call spreads, iron condors, iron butterflies. Now with Questrade, that only required level 3 and I believe 5,000 minimum equity in a margin account. So I started doing that. I started selling spreads. Now this teaches you the concept, the basics, but it doesn't necessarily teach you what's the right approach or what's the best strategy, how to implement it. Is it best to sell 45 days, 60 days, or weeklies? Or how do you manage a put spread that gets tested? So he's got the basic concepts if you want to be mechanical. But honestly, I think through experience, through my own mistakes and through losses, I've learned way more. But it took the foundation or the curiosity to learn all this. So from my own experience, I've learned whether weekly is better, whether selling on red days or selling on green days is better, or how to manage or how to save a trade that goes against you, how to manage your buying power as well. So that comes from experience, from doing it and making mistakes. But I never paid for a course, but definitely if you want to learn how to sell options, I recommend this channel here because he explains it very well. And then I fell on this channel here, Skyview Trading. Now he's got the nice, I don't know, the animation videos, really well done. Explains options very well. And so these videos were more just a confirmation of what I learned from Option Alpha. He explains the vertical spreads very well, the iron condors as well, visually as well. Now, I've never paid for any course, but with Skyview Trading, I did try their Trade Alert program. I believe they have a trial. Actually, let's see. I went for the trial. I think it was $19 for a few days or even 21 days. I don't remember. But I didn't pay more than $20.
Now that you understand why options exist.
And it was for a short period. Actually, let's see if it's in the description here. Our site, it's probably on his website for sure. Yeah, so I tried it. I didn't like it because it was mostly strangles. And I wasn't getting enough alerts either. And it was trades that I wasn't interested in. I didn't like it. I didn't find an edge necessarily in the trades. The volatility wasn't so high in the underlyings that they were choosing. Plus, I am someone that is able to find my own trades easily. So it's just a matter of curiosity to see what other people are trading. But it didn't interest me at all, so I didn't continue, of course. But their website is very well done. The program is well organized as well. And I wanted to see what they were doing in March 2020. What were the trades they had in March 2020? And you're able to see their old videos when you sign up to their program. But what I saw their old videos in March 2020, it wasn't. They didn't have any interesting trades in March. I feel like some trades were missing. I feel they weren't sharing all their trades. Probably they're giving safe trades, but I felt like for someone who is if they are experts in selling options, for sure they would be selling way more than that in March 2020. So I didn't feel like I was getting the information that I was looking for, so I didn't continue. So that's the only time I actually paid for something related to option selling, if I don't count my losses from selling options. And then finally, of course, we've got Tastytrade. So Tastytrade, I've never really learned any of the mechanics from Tastytrade, but it's mostly, I just enjoy watching videos that talk about option selling, and I like the research that they do. So, and most importantly, I like when they bring on rising stars and they discuss their own strategy. So I like to compare strategies, gives me ideas, or at least confirms what's good and what's not good. So I think that's the best part of Tastytrade, is when they bring on rising stars and share their and then these stars share their trading strategies. But not all the rising stars have strategies that I would follow, but it's still nice to hear. I'm always open to hearing new strategies, maybe to improve my existing strategy or even to confirm that my existing strategy is good. So I'm always open to hearing new strategies. And it's nice to see success stories where people make a living or live off their option selling trades. Like this guy, for example, he was an electrical engineer, I think, in Chicago, from Vancouver, originally from Iran, and he does strangles on earnings. And that's the thing, I don't know what he does outside earnings. That's what I would like to know, but they don't talk about everything. But in general, he does a lot of strangles, and he's not afraid to manage them either. He manages them aggressively, and he's creative as well in managing his strangles when they go against him. But you see, when I watch other people's videos and they always talk about how they get tested on the call side, it's confirmation to me that the call side is a headache. So that's why I tend to sell puts only, just to avoid the risks or the stress that comes by selling calls. Of course, there are opportunities, or there are moments where selling calls is profitable, but I find that selling puts wins more often, and selling calls, you'll have to manage them more often, and they're scary to manage because the stock can keep on going forever. But at least when you sell a put, you know that eventually, if you're selling a put on a quality stock and your timing is somewhat good, you know that eventually the stock's going to come back up. So it's just a matter of being able to afford rolling the put. Obviously, I saw Karen, the super trader here as well, that made millions selling options. So that they've got 3 videos on her, so you could sort of understand what her strategy is. So she does mostly strangles, but she manages too early, and I think that's how she got caught. She probably got caught on the call side, and and she lost a lot of money after that. But it's interesting to see how other people trade and learn from other people's mistakes as well. I also had the opportunity to chat with Tom from Tastytrade, so watch that video on my channel. And I learned a lot about his strategy, which is mostly selling strangles, but pretty close strangles. So he starts off selling strangles at around, I think, 15 delta on each side. But then he manages very often. I think he does like starts with 45-day trades, expiry, or days till expiration, and then he'll manage the winning side. So he'll manage his delta almost every day. So let's say the stock is trading at 100, he sells, let's say, an 80, 120 strangle. If the stock drops to 90, then he'll bring the 120 call closer, bringing it to 110. If the stock drops to 80, he'll bring the call side closer to 100. So he's reducing the strangle, closing the profitable side, bringing it closer to collect more credit. And if, let's say, the stock drops below 80, he'll bring the call even closer. He'll even go inverted if he has to. So if the stock drops to 60, he'll bring his call all the way to 80, maybe even 75. So the call will actually be lower than the put side. He doesn't touch the tested side. And the idea is he collects a lot of credit by doing that. And he trusts in the cyclicality of the stock. So if the stock eventually comes back up, or if volatility drops, then because of all the credits that he received, he's able to close a trade for a profit. So that's his strategy. I'm not a fan of that strategy. It looks amazing because he's collecting a lot of credits, but it seems a little bit stressful because every time he's tightening his break-even zone. His profit zone, his break-even, keeps getting smaller and smaller by moving down the strikes, even though he's collecting a credit, but he's not collecting more than the amount that he's bringing down his strikes. So it's just and it's going to take a lot of buying power as well, because you're selling naked and you're getting closer at the money, sometimes in the money. So it's going to require a lot of buying power to do that. So it's not for everyone. I guess if he's doing it, then it works for him. But for example, that's something I like to watch, because as long as I understand what other people are doing, it improves my option selling knowledge, and just confirms to me what works, what doesn't, and what doesn't work for me as well. Yeah, so that's how I learned to sell options, really through YouTube, nothing else. I didn't pay for anything, and just my own experience as well, making my own mistakes. By trading and by going for it, I discovered my own observations, let's say, and I realized what works, what doesn't, and what also matches my personality. If I don't like stress, then I avoid the trades that make me stressful. I avoid the trades that make me stressed. Also, if I don't make a particular trade, I usually watch it and pretend as if I made it, so I paper trade it, and I realize what works and what doesn't, and I realize that earnings is fun. I like to sell puts on earnings. A lot of times they work, sometimes they don't, but that's where you have to manage. But most of the time they do work, and if they don't, then you just have to manage the trade. But what's important to know is that it might not be for you. The reason I got into option selling is because I like the idea where if someone has an amount of capital and that amount of capital doesn't grow every year, they're not able to contribute to it every year, how do you have this capital generate money for you? If you put it in an index fund, how's it generating money to you? It only generates money if the stock market keeps going up over time, and then you sell a bit of it every year or every month as income. So it's basically capital gains, but you consider that as income because the market's going up. So you're taking a part the portion that you need for income. But the market goes up on average 7% a year. So if you have 100,000 and you're making 7% on average per year, that's $7,000 a year. So $7,000 a year is not enough, in my opinion, to live off. If you swing trade, well, I think the problem with swing trading is that you have to time it perfectly, so it's hard. And if you have to wait for the stock to drop, then you have to wait for the stock to go up. That's if it goes up. What if it keeps going lower? And even if you try to spread out your portfolio in a way so that even if one of your purchases goes down and never comes back, well, you still have more money to buy other stuff that drop. But I just didn't like the fact that you had to wait. I'm someone that's not patient, so it didn't work for me. So when I discovered option selling, I realized that you don't have to wait. You click a button, sell, and money comes in. Now, whether you keep that money or not, that's the whole question. But most of the time, you end up keeping that money. And if you don't, well, there are ways to manage a trade, so you can save the trade and don't confirm a loss. So that's what I liked about option selling. So, for example, here's a trade that I just made on Spotify. I did a covered call trade on Spotify. It could have been a put as well. Here, let's look at Baba instead. Here's a naked put that I sold on Alibaba this Friday. Sold a 120 put on Baba for November 19, collected $4. So what this means is, so I got $400 in my account, but I don't necessarily keep it. The only way I keep it is if I hold the trade until November 19 and Baba stays above 120 by then. Baba is trading at 145, I think, right now, but it has dropped a lot. So it's the most likely scenario is that it doesn't keep dropping and goes back up. But even if it drops, it still has 25 points of room to drop, and I still keep this $4. Or what happens is stock comes back up a little bit of time goes by, this $4 becomes worth $3 or $2, and I can just buy it back for $3 or $2, and then I'm out of the trade, but I just confirmed a $2 profit, which is with one contract, that's $200. So that concept makes sense to me, selling options that way, giving yourself room to be wrong, and you can still make money, and you don't necessarily have to wait for much. But the whole point I was trying to get across with this video is that everything's available online for free. You don't have to pay for courses. The only advantage of courses is that it's all organized for you, but everything's available online for free. And I mentioned the resources that I use to learn options. And honestly, you keep learning as you're trading. The true learning comes from your own experience, your own mistakes. I lived through March 2020, so I learned a lot from that crash, a pretty big crash. And I was selling options before. And yeah, so I really think that's the best learning resource is your own experience. All right, so if you have any questions in the comment section below, thanks for watching.